Welcome back. Next, we have StrikePoint Gold Inc. Trades on the OTCQB under the symbol STKXF and on the TSXV under the symbol SKP. And its combined management, board of directors, and technical team have a track record of financing, exploring, discovering, and selling mineral deposits and believes in the long-term potential of gold and silver. And during the recent bear market in precious metals, acquired several highly prospective exploration properties which host high-grade gold and silver. Pleased to welcome CEO, President, and Director Mike Allen. Welcome to the conference today, Mike.
Nice to be here. Thank you very much.
Perfect. The floor is yours. Call me back when you're ready for questions.
Okay. Obviously, here we're talking about StrikePoint Gold. We're a Nevada explorer. We've been accumulating properties in the Walker Lane, which is the western belt in the state of Nevada. There's been some interesting activity. The Walker Lane is going on a bit of a renaissance right now. I played my part in past lives in bringing attention to the Walker Lane, and we'll delve into it a little bit more. Slide 2, the cautionary statement. This is customary. Read that at your leisure. It's found on our website as well if you ever want to get into the details. So why StrikePoint and why now? I think that people, if you're monitoring the gold space, you can see that there's a fundamental shift happening in gold right now. In the past 12 to 18 months, the gold price has essentially doubled, run from 2000 to today, probably $37,500, $37.50. And that's changed a lot of things. It's brought a lot of investors. People are making money in the space. And we're just starting to see the beginnings of a bull market. So it's a good time to get positioned in gold. The gold price rising faster than inflation has a lot of spin out effects in the mining industry. A lot of the projects start to look very attractive, and we'll talk about them a bit more sooner on. And one of the reasons why I work in Nevada is it's a safe, simple jurisdiction to work in. And the projects, because of the size and the scale that you're dealing with these large open pit heap leach projects, they've got a massive amount of leverage. So we've seen several M&A transactions where in Nevada in the last little while, and I've been part of one of them. And then we're also seeing that others are happening, and it's definitely the proof is that the trade is on. So talking about one of those recent M&A transactions, there's a case study. It's the Pan Gold Mine. This recently got sold. It was within Calibre Equinox prior to their merger, and it didn't fit in the resulting portfolio of Equinox going out. So it was sold for $115 million in cash and shares. It was announced in August 7th of 2025. And Pan is not a particularly big mine, not a particularly great mine. It's relatively small, 30 to 40,000 ounces a year, and it's got a little bit of reserves left, 247,000 ounces at 0.34. And the all-in sustaining costs are call it $1,650 an ounce. When you do that, midpoint guidance and that $2,000 an ounce, Pan ships home about $15.75 million a year in revenue, which isn't bad, isn't great, but it's with the mining space, you're right on the ragged edge. If you have a big piece of equipment break, your primary crusher, you break something there, a larger piece of equipment goes down, you're in trouble. Like those things are expensive and you're down. You run those numbers at 3,500 and your margin has quadrupled and you're just over just under $65 million a year that the Pan mine is shipping home. So you can see where the leverage is. And what I would point out is we have the Hercules Gold Project where we've got an exploration target and it's 3 to 4 times the size and approximately double the grade of Pan. So it shows you, we've got a $4 million, $5 million market cap, And there's a lot of leverage, a lot of value that needs to be surfaced in StrikePoint when you look at how this transaction plays out. Another case study is Augusta Gold. It was sold to, or announced that they were selling themselves to Anglo Gold down here around this new discovery by Beatty, Nevada. It's a good sized resource, just over 1 million ounces, 1.2 million ounces of mixed oxide and sulfide. So it's a complicated thing to process, but about the same, grossly speaking, the same size and same grade as Hercules. They've also got a smaller operation, but it was a $197 million valuation. So again, you play the contrast between what this project is being bought for versus the value or that the market has given to StrikePoint. We've got a lot of ground to make up, and so there's a lot of value to be surfaced for shareholders. So as a company, we're starting to get more active and get out there and starting to talk about things more in terms of getting our profile up. We just got a permit further in the south of the project, and we can talk about that a bit later on. In terms of again, just hammering on this concept of the grade of Hercules and the scale of it, this is a selection of Nevada gold projects that I've curated. So just put together a spreadsheet. This is measured and indicated grade, and their and whether or not they're in production, the yellow slides, and the blue is developers. And you can see we fit well into the spectrum of projects that are available in the Western U.S. And you can see this is North Bullfrog. This was sold to Anglo Gold. Florida Canyon was sold to Integra. Penn we talked about. There's a lot of transactions happening. Big companies, big money is starting to move into the Western U.S. again and buying these low grade but large projects. So I think that the summary of this is the flagship asset of StrikePoint Gold, the Hercules Gold project, has the size and grade to potentially be advanced in development, either into development all the way, taking it there all the way, or be sold to a senior. And this is the market in this rising gold price to really start unlocking value at Hercules. So this is the moment for investors to get in on the project and watch us walk value into the company. So a bit more details on the Hercules Gold project. The exploration target, again, is what we've been talking about. The project is just outside, or an hour outside of Reno. It's about 100 square kilometers, and it's got that potential to be one of these open pit heap leach targets that the bigger companies are looking for. The reason why the bigger companies look for these type of targets is the open pit heap leach. Open pit is relatively straightforward to execute on, particularly in Nevada. They've got a very skilled workforce. They know how to run that big equipment, how to get the ore out of the ground. And then the heap leach operation is an efficient way of extracting the gold from the rock and getting maximum profitability out of it. It's simple, it's fast, it's established technology, and so it really can make an operation quite profitable. In terms of Hercules, we've taken the project from an early stage exploration program where it was sort of difficult to predict the mineralization, and we've had a breakthrough, and we've gotten a predictable geological model. And that's important because once you get it predictable, then you can start to build tons and grade and get yourself into something that you can head towards mining. We've got a lot of exploration upside, which is good, and we've got a lot of permits. We've done a lot of the behind the scenes, for lack of a better term, work, the permitting work. And so we've got a plan of operation for delineation, taking the exploration target into measured and indicated resources. And then we've got 3, what I'll call exploration permits in the southern part of the project for demonstrating the upside is the best way of putting it. So, the summary of it is, like, when you look at the transactions that have happened in Nevada, Hercules has the potential to be as good or better than any of these recently transacted upon projects in Nevada. Recent drilling. This is me out on the rocks on the Hercules Gold project. We're talking about the cliffs showing, and we put out some holes this spring, right in line with what we're expecting in terms of the project to be. 117 meters is about 350 feet for the Americans, just under 0.5 grams per ton gold and 3 grams per ton silver. Just to put that into dollar value for people, $3,500 gold. Let's use round numbers. Let's use $3,100 gold in terms of a valuation. 0.5 gram of gold, 0.47, is worth about $50 American. When you think about these efficient open pit heap leach targets, a 200-ton truck has got $10,000 worth of gold in it. That's an interesting way of putting it. And when you're doing an operation that is, for the sake of the argument, 100,000 tons a day, that is, what is that? 50 times 100,000. $5 million worth of gold a day being put through onto the leach bed. That's where you start to get the scale and the massive amount of business that these open pit heap leach targets can do in Nevada. So when we are doing this drilling, this hole here, hole 5, it's the southernmost hole that we've ever put into the Hercules showing. We plotted it out, and right about where I'm standing is where the intercept went through the the cliff's target. I hope you can see the image here. There's this little yellow patch over my shoulder. That's the waste rock pile from another historic underground working where old timers went in, and somebody in relatively recent times went in and got a 1 ounce sample, 1 ounce of gold sample out of that. And so that's further to the south of any drilling that we've ever done. This structure continues on for several hundred meters. This is a burn, a forest fire, and then it goes up this hill. So there's a lot of expansion potential that needs to be articulated. So we talk about the exploration target. It gave us the range of values between 819 and 1.02 million ounces, but it only had the data that it had. It didn't have any drilling out this way. So there's a lot more openness, and this is just in the northern part of the property. So there's a lot more expansion that we can do and put big numbers up on the board and put more resources, into the ground and unlock value for shareholders. The other thing is that with our predictable geological model, we batted 1,000. We had a 100% success rate in our drilling. So we're feeling confident that we've got this dialed in and we can move forward and start to delineate off resources. We also have next steps. So we announced on Tuesday of this week, we received a drill permit for Pony Meadows. And this is a small 3-hole permit, a little bit of road work associated with it, but it complements our permits on the Como Comets and then on Sirens. Importantly, on these targets to the south, there's visible gold at Sirens and Pony Meadows. So the confidence to go in there and drill these targets is quite high. And then Como Comets is between the past producing Healy Logan mine, which is about here. And then this is the Como district. This is a historical mining district controlled by Newmont. And so there's a structure, you can see it in the topography, that goes out this way, and it hosts the mineralization in Como, and then it hosts the mineralization at the Healy Logan, and we're just going to drill in the middle. And we've got some historical work, some drilling that was done on both sides of where we want to drill, and we've got some very significant numbers that we're going to be following up on. speaking specifically about the Sirens target, this is the northernmost of here. Our exploration target is up here on these showings to the north. There's a big ridge, and then we come in to the south, and that's why it's different. Sirens, 2 kilometers south of Hercules, pan gold at surface. This is a selection, a zoom in photo of the panning that the guys did, and the best indication that there's gold there is there's gold there. So you can get gold in the pan, and there's a minor amount of historical drilling. There's about 300 holes that have been put into the property. 294 are up here in where we have the exploration target, and about 6 are on Sirens. They had some good results down there, and good by modern standards. They're looking. This is a hole drilled in 2008, 38 meters. So grossly speaking, about 140, 150 feet, 0.64 grams per ton. So $65 rock, and importantly, ending in mineralization. So we don't know whether there's another 5 meters of mineralization that needs to be drilled when we go in here, or if there's another 50. It's some good grade, and we need to develop it out, drill it out, and just see what it is down here at Sirens. Again, another hole, similar grade, slightly higher, 25 meters, so just about 85 feet, 0.68 grams per ton, and it ended in mineralization. So again, we don't know what the scale is. The people that did this drilling back in 2008, they had a postage stamp. They had about 8 claims that they were working off of, and they were looking for something narrow and high grade. This isn't what they got. They backed away from it. It wasn't successful for them, and we were able to, eventually those claims got dropped, and we just staked right over it and harvested the historical data. So it's an excellent target, obviously visible gold at surface, good grades throughout the holes, and it's something that we're excited to test in 2025. Pony Meadows, this is the new one where we just got permitted. Again, there's pan gold at surface. What I particularly like about this target is the scale of it. There's a ring structure there, and it's about 2.6 kilometers long, where there's a vein occupying that structure. It's never been drilled, but we just got our permit for it. So we've got 3 holes that we can put into here without modifying the permit, a little bit of road work. And again, that's something that we hope to get off in the fall of 2025 or the spring of 2026. The Como Comets target, we talked about this earlier. It's about 5 kilometers away on the western flank of the project. It's between the past producing property held by Newmont. This is Como, and there is another past producer here, the Healy Logan, and there's a structure that joins the two up. Nobody's ever drilled in the middle. We've got surface samples up to 5 grams per ton in the area, and there's historical data that shows there's some really excellent targets exiting the Newmont property and then off of the eastern edge of the Healy Logan. So it's, again, something that we look forward to drilling in late 2025, early 2026, and we'll be out there. And these are what I would call low risk targets. We know that there's mineralization down there. There's 5 grams per ton surface. There's drilling to the east of us. There's drilling to the west of us, and we just have to fill in the gap in the middle. I mentioned at the beginning of this presentation that we are one of the largest landholders in the Walker Lane, and we also have something called the Cuprite Gold Project, which is just south of Goldfield, Nevada. It's a caldera structure. It's actually similar to what the Anglo Gold has got to the south of us down by Beatty, and that's the reason why we staked this project. Anglo Gold has got what's called the Arthur Gold Project. It's on the edge of a caldera. They're drilling out ring structures similar to what we see at Hercules, and Cuprite is a photocopy of the Arthur Gold Project. We've put some drilling into it. We've confirmed that there's gold in the system, but the opportunity for Hercules came across, and we've just sort of shelved it. while we wait for better results and a better gold market to work on Cuprite. But it is something that is there. It's very significant. And it's also just south of this project here, Goldfield, Nevada. Again, another caldera structure, ring structures that you're looking for. And that's the sort of theme of the company. We're looking for these large-scale collapsed calderas that have gold mineralization along the structures. And we think that we've gotten two excellent projects within the company. Anna gave a brief introduction in terms of the people. This is myself on the slide here. My exposure in Nevada has been about 15, 20 years now. It's starting to get on. I had this project. This is the Sterling. I made a transaction. We bought this from a company here in BC. We paid $10 million American for it. 16 months later, we'd injected $30 million of exploration capital into it, and we sold it for $120 million. That's the speed that we can unlock value and make wins for shareholders. We tripled the share price in that 16 months, and we walked out at the all-time high. And that's a really important point for shareholders, because everybody that ever bought a stick of stock in Empire had an opportunity to make money. And so that was the win that we had. And I was actually just at a mining conference down in Beaver Creek in Colorado, and I actually had people come up to me and it's 5 years later or whatever that number is, and talk to me about how smart and pragmatic that deal was. We didn't wait for the huge market cap. We went in, we did a transaction, we unlocked value, surfaced a win for shareholders, and then we walked away. We got out and crystallized the win and crystallized the liquidity event for shareholders. Other people that are involved with the company, Sean Kuhn is the executive chairman. He's also a director. His day job is Dolly Varden Silver. Sean is very well connected in terms of raising money, raising capital for companies, and so we're really lucky to have him. The guy on the bottom is Adrian Fleming. Adrian and I have worked together. He was a director of Northern Empire, and I was a kid at this place called Hope Bay in the year 2000, and Adrian took me under his wing. And at the end of the season, Hope Bay is on the Arctic Ocean. We were up there in February at 65 below. At the end of the season, Adrian made a prediction as to who was going to make something of themselves in the mining space, and his prediction was me. And we did some business together. We've done some different deals, not together, but he's been a fan of mine for the last 25 years, and it's really been a lot of fun to work with him. In terms of the share capital, we did a rollback last fall, so it's a relatively tight structure. 41.6 million shares outstanding, a few warrants associated with a financing. I think that the average, the majority of these warrants have a strike price at about 30 cents, and then there's a few of the others that are out there further away. So there's a good run in the stock that could be done before you start to hit a warrant overhang. $5 million market cap, a lot of leverage considering what we have in Nevada, and about $1 million in cash and securities. Leading shareholders, Pathfinder, they're a group in Vancouver that have made a lot of money on my businesses in Nevada, so they're a fan of mine. Eric Sprott is in there. He's mining royalty. And then it goes into management. Depending on the day, I'm the fourth or fifth largest shareholder of the company, and I trade positions with Sean when we get buying stock. So people are interested. People are putting their own money into the story, and it's a good place to be. And with that, I think I'm working on a good bit of time. Further information. Knox Henderson, this is his contact details down here. He's the IR person. You can always go to our website, strikepointgold.com, and get more information and sign up onto our distribution list. With that, I'll open it up for questions.
Thank you, Mike. All right, let's start with a question. Kenna asks about Pony Metals. What is the timeline from permit to drill and then to results?
So for Pony Meadows, the permit is in hand. So essentially, the clock starts. We've got to get engaged with the drill contractors. I would like to be out there sometime this fall. Obviously, the budget dependent and contractor availability depends. So hopefully, sometime this fall. Turnaround for results for Nevada is generally about 6 weeks, is what we'd be looking at. So if we, for the sake of the argument, if we were out there prior to say early November, we'd have results into early into the new year. The drilling is relatively quick, but it's the assaying that takes the time right now.
And Chris asks, is Walker Lane the main exploration area currently, and have there been others in the past?
So within, I'm assuming that's a within the company question. Right now, the Walker Lane is the focus of the company, and that's my flair that I bring to it, because as the CEO, I've got experience in Nevada. StrikePoint is a mature company. It's been around for a few years. It's had other exploration efforts in the Golden Triangle, where we still retain a couple of properties. There was a time when, prior to me, when it explored in the Yukon, and it also explored in Manitoba, but those were 20 years ago type adventures.
And Chris, as you mentioned that your team has a track record, can you talk about some past projects and maybe some past wins?
Yeah, I'll just hop to a quick slide here. As I said, there's the renaissance is going on in the Walker Lane, and that is actually probably been kicked off by the Sterling transaction. And we talked about this briefly, identified that asset. We brought it into the company, and we bought it for $10 million, sold it 16 months later for $120 million, all-time high, perfect. Another actually story that's on this map is I identified a target right here in this kink in the road. This is called the Hasbrook project. Bought it for $20 million, and we put that through feasibility study and pre-feasibility study and permitting effort. And that stock has run, I believe it's north of $100 million market cap company right now. So that is something else that we did in Nevada. In terms of other companies, Adrian has had a series of successful wins. He was involved in it's called Guyana Goldfield. They sold to G Mining for a huge win. It was about $500 million, and then they've subsequently spun out into Greenheart, which is having great exploration success in South America.
All right, perfect. And last question, talk a little bit about the permitting environment in Nevada. Are there any specific hurdles that you're overcoming, and how are you doing it?
Part of our due diligence before we get involved with a project is to actually answer that question. The projects that we've got, and I'll just hop to a different slide. Just to give an idea of what we're dealing with here. All right. In Nevada, there's hot button species that the regulators get themselves concerned about. And in the southern part of the state, they're concerned about desert tortoise. And there's actually what they call the tortoise line, where the habitat for these things are. And when we look at projects, it's a selection criteria. The tortoise line is actually just at Beatty. So north of there's no desert tortoise, and north of there is where we have Cuprite. So there isn't a hot button species that we have there. At Hercules, you're in the northern part of the state, and the hot button species it's sage grouse, and sage grouse is again the species that they get concerned about, but their habitat is limited by elevation, and so when we looked at the getting involved with the Hercules Gold project, it's too high of elevation. So for a species of concern, it's not important. In terms of the larger permitting picture in Nevada, this is where America goes for mining. The regulators here are very well educated and very well versed in permitting mines. And so it's a regimented process. It's very much check all the boxes, do not proceed past, until you've checked all the boxes. But once you do, a permit pops out. And so it is regimented. It's quite well defined. And so you can execute on it. And the timeline for permitting a large mine in Nevada is about 3 years, which is competitive with just about any jurisdiction on the planet.
All right. Well, that's fascinating about that. Thank you for that. Mike, great presentation. Thank you very much. Very thorough. And we appreciate you coming on the conference. And we certainly hope to catch up with you with some updates in the future. Thank you again.
Thank you, Anna. Appreciate the time.
All right, everyone. We'll be right back.